Okay, well, let's get started. Well, thank you for joining us to the BizX community. We've got a great webinar today. We've got a guest, Thomas Savageau, from all the way from Enumclaw, Washington. I got to meet Tom earlier this, I think about a year ago. We were introduced from another member, John from EOS, and he told me about this thing called ERTC tax filing. And I couldn't get my head around it. And after I spoke with Tom for about 20 minutes, I quickly realized what a great financial opportunity this was to take advantage of. You know, BizX, our purpose is to help enrich the businesses and lives of the communities we touch, and it's really about bringing people together. And we believe that 1 + 1 can really equal 11. And through the pandemic, there was a lot that we did as a community. We hosted a number of webinars and ways that we helped each other. This, to me, has been a great way we've been able to help BizX members. I believe almost over $5 million has been generated in basically tax refunds for BizX members in cash. And anybody that I've had the pleasure of saying here, talk to Thomas's team, they've taken care of nicely. So we thought it would be great to put together a little informational webinar. He founded this company in 2020. We'll have some Q&A after. He's got all the details, and I will pass it over to Thomas. Thank you, Thomas.
Thank you, Bob. I appreciate it. Yeah, as Bob said, we first started working with BizX here last year, helping their members file for ERTC. But I've been familiar with BizX for quite some time, just because my background has been in more of the accounting and business consulting world. And I've had plenty of clients that have used BizX in the past. So was aware of what BizX does. And I think one of the things that worked really well between BizX and the philosophy of the business that I have is that it's really meant to focus on helping small businesses, especially in this case through COVID, in any way that we can. So there was a lot of similarities when, as Bob said, John from EOS pointed out the fact that we should be working together a little bit more and helping out with BizX clients filing for the ERTC. I was happy to have the opportunity to do that. So just a real quick background here for me. My background's in accounting. I had a regional accounting firm over in Central Washington that sold about 7 years ago. And since that point in time, I've been doing outsourced CFO work, helping small businesses, typically on the finance standpoint, a lot of mergers and acquisitions, and helping to figure out how to get more financially stable as far as a business goes. I've got 5 different businesses myself, so I really do enjoy the small business aspect. And through COVID, I was helping a lot of businesses navigate some of the hurdles that COVID had, some of the tax credits that COVID had. Most of you had PPP, helping businesses both get that and get forgiveness for that. And then when this employee retention tax credit came along, I knew that this was going to be something that was very big, bigger than the PPP, quite frankly, and very underserved in regards to businesses actually having a good way to take advantage of what this program was. And that's where ERTC filing came about, is creating a system that allows businesses that can file for this that might not have otherwise had an ability to file, or avoiding some of the companies out there that are charging exorbitant amounts on a contingency fee basis, which is an illegal practice from a CPA firm standpoint. Unfortunately, people are doing that for this. So it was more to combat that, help small business owners. And that's kind of what brought me into the world of employee retention tax credit. And now we're one of the largest filers in the nation for ERTC filings. And definitely enjoying what we do, helping small business owners. So that's just a little bit on my background. I think the goal here is just to do a quick overview of about 15 minutes of what the employee retention tax credit is. We'll have a little Q&A session. So if you have questions, go ahead and write them in the chat. I believe we talked about a feature where if you want to raise a hand, we'll try to facilitate doing live questions as well if you don't want to write them in the chat. However, I don't see the participants, so we'll have to get some help from the moderator to be able to get that. So I'm going to share my screen. We're going to do a quick overview of what the ERTC is, and hopefully that'll generate some questions. If you haven't heard of the ERTC, which it doesn't surprise me that there still are a lot of businesses out there that haven't heard of this. We get calls, dozens of calls a day of people that are asking what the employee retention tax credit is. And real quick before I go on, Bob, can you see my screen okay?
Yes, we can.
Great, just double checking. I'm going to cover this because some of you know what the ERTC is. So I'm going to cover this at more of a high level of the basics. Who's eligible? How does it work? Can I still file for it? That's a question we get a lot because this was something that was related to COVID, and here we're kind of working our way out of COVID. So how does this work now? How much is it? And how can I figure out how much that I can get? We get that question a lot. How much can I get from what this is? The easiest answer I've been able to give to anyone is if you got the PPP, keep in mind that it's typically the amount that we're talking about here, and hopefully this gets people's attention, is usually at least 1 times what you got from the PPP, usually. So we're not talking small amounts. We're talking very large amounts that were created due to the COVID tax credits to help businesses navigate through what they did. And they're still there. They're still eligible. You can still go back and file for what these are. So what are these? Let's go over some basics of the employee retention tax credit. Key points. At first, when the ERTC was created, you couldn't take both the PPP and ERTC. This is one reason why the employee retention tax credit wasn't very large when it first came out. This is because most of us went out and got PPP loans because our banks were getting a hold of us and said, hey, you're eligible to get this PPP loan. You're eligible to get it funded in a short period of time and get 2.5 months worth of payroll. Well, Congress quickly found out later on in 2020 that 2.5 months worth of payroll generated from PPP wasn't enough to cover losses that businesses had. And therefore, Congress changed the rules and said, hey, if you got a PPP, that's fine. You can also apply for this ERTC as long as you're not double dipping, using the same payroll in both programs, which is easy because as you see in 2020, sure, you might have gotten 2.5 months of payroll covered under the PPP, but here you might have another 7 or 8 months worth of payroll that you didn't have covered that would be eligible for the ERTC. So that was one of the big changes that made the ERTC come back around towards the end of 2020 where businesses really just didn't know about it. It has changed and morphed a few times, actually 3 or 4 times that the program was expanded into 2021. And I'm going to go over how that works, both from the eligibility standpoint and from the calculations of the amounts that you're eligible for. And the businesses that both started, unlike PPP, if you started your business after February 15, 2020, you're not eligible to file for PPP typically. In this case, it was the exact opposite. You can file for ERTC if you've had a business from whatever date, but if you actually started your business after February 15th of 2020, I'm going to go over a couple of rules that automatically qualify you for this. So this is really big for new businesses out there that navigated COVID and actually started their business during COVID. Those guys have this extra little benefit that's out there that some businesses still don't know about. We just want to make sure that they understand what that is. So what is the ERTC? It's a credit on your payroll that employers pay. It's not a credit on payroll taxes. People get very confused thinking, hey, this is a tax credit, right? It's an employee retention tax credit. It's something I'm going to get back for just the taxes. That is not true. It's based off the payroll figures you paid. And depending on the period, depending on eligibility, it could be up to 70% of the payroll that you paid to your employees, which is this is where the number gets fairly large when we're talking about the ERTC. It's a business payroll tax credit, not a personal or income tax credit. This is actually one of the complications that I'll talk about later in regards to why this wasn't made as big as the PPP was. There's not a lot of very high-end payroll tax filers and people focused on complicated payroll tax matters, which meant that there was a very large need to have companies like mine go out there and provide that assistance to file for something like this. This is not a grant or a loan. This is a huge benefit as compared to the PPP. You had to come back later and get the PPP forgiven. That is not how this works. When you apply for the, not even apply for this, I say apply, but when you file for this, you're going to get a check. And when you get that check, sure, it is business income. So it does change the amount of income the business has, but you're not required to report back at any point in time what you use that for. As long as you report it as business income, you can even take it out of the business and use it for personal as long as it's recorded as business income. And again, it's fully refundable. It applies against your current payroll tax and payroll, and it is an actual refund check that you get from the IRS. The IRS has no way of paying this electronically or doing anything differently other than filing and issuing a check to the business and sent straight to the business. So who's eligible? Let's start with that. So in 2020, the original eligibility was a little more restricted than 2021. You had to have 100 or fewer full-time employees in 2019 to be basically mostly eligible. You could have had more than this, but you really then only would have been eligible on those wages that you paid to employees while they were furloughed or laid off. If you were continuing to pay wages to them, those are the only wages that were eligible. That doesn't apply to most of you and most small businesses. Most small businesses had 100 or fewer full-time employees, and therefore you're eligible for all wages that are eligible for the ERTC. So 100 or fewer average employees. And then you had to meet two restrictions. One, you had to have a fully or partially suspended operations. That's where people get confused. And the IRS actually, the one thing that they have some good instructions on this is what qualifies as a fully or partially suspended operations. Really good qualifying factor is capacity restrictions. That's where most of our clients end up filing for this. If you had any sort of capacity restriction that for any period, you qualify during that period. That makes you qualified, and then we can start getting the calculations to figure out how much you qualified for. But that's only one of two ways to qualify. The second way is to have a decline in receipts. If you had a decline in receipts in 2020, it had to be a 50% decline in receipts compared to 2019, you qualify that way. Here's one of the biggest misconceptions, though, about what the ERTC is. A lot of CPAs, unfortunately, are passing along some very poor information that said, sorry, you don't qualify because you didn't meet the decline in gross receipts test. That is not true. It is very clear on the IRS website that it is an either or. If I had capacity restrictions or some other government mandated shutdown, I'm going to qualify regardless of how my sales went. If my sales are higher, that's fine. You are allowed to apply for this as long as you meet one of these requirements, is what they do on there. You do have to meet it for each period that we're actually looking at, which is usually each quarter that we're looking at. But if you had that fully or partially suspended operations, you do not have to have the decline in receipts. If you have the decline in receipts, you do not have to have the fully or partially suspended operations. So let's say in 2020, I'm a restaurant in Washington State. I know we're dealing a lot with Washington and California, Oregon businesses here. Great thing about Washington and California is that we actually had restrictions in these states pretty much from the beginning of 2020 all the way through June, depending on which state of 2021. So in 2020, I should be eligible as a restaurant because I had capacity restrictions to file for everything from basically March of 2020 through December of 2020. So how much can I qualify for? It's 50% of your qualified wages, including medical. If you pay for any sort of group medical plan, you can include that of what included in here from March 13th of 2020 until December 31st of 2020, up to $10,000 per employee. So if I have 5 employees that I paid more than $10,000 for the year, I'm going to be eligible to claim 50% of that for the 5 employees. So I have 5 employees, I paid $50,000. I'm eligible to get an ERTC of $25,000 just for 2020. And again, I'll use this example of 5 employees. Let's say I'm paying them full-time employees $40,000 a year. So it's a good round number to use. $25,000 is what I'm eligible to get back in 2020. You have to file the payroll tax forms, and it's filed on the 941X at this point in time. So it's an amended 941, and the IRS will turn around and issue a check for $25,000 for 2020. There are some exclusions, and again, in 20 minutes that we have here, we're not going to go into a lot of the details of what needs to be excluded. I'm really covering this at a high level. Some of the excluded wages include related employees. So if I have my son that works here for one of my businesses, I cannot include his wages because he's related to me. And S corporation owners, that's actually one of the more complicated parts of ERTC, what owners' wages qualify. Unfortunately, if you are an S corporation and it's only you that are paying wages and you own 100% of the S corporation, you're not going to be eligible to include your wages. So this does end up disqualifying a lot of smaller contractors that don't have other employees. You actually have to have other non-related employees to qualify for the ERTC. So that's the start of this. This is where in 2020, the ERTC came around. 50% of the first 10,000 you paid per employee is the amount that you're eligible for, as long as you had a reduction in revenue or some sort of government mandated shutdown, you're eligible. In 2021, they completely revamped and actually made the program much better compared to what it was in 2020. They extended it through December 31st, 2021, although they backed that last quarter up in certain ways, and we'll go over that in a sec. They increased it. Instead of 100 full-time employees, now if you had 500 or less full-time employees, you're eligible for the full program if you're eligible for a period. Instead of having a 50% reduction in revenue compared to 2019, all you had to have is a 20% reduction in revenue compared to 2019. So it made it easier to qualify if you're qualifying under the revenue reduction. However, you don't have to qualify again under the revenue reduction as long as you had some sort of government mandated shutdown, capacity restriction, hour change, something along there that made you partially suspend operations, then you're going to qualify regardless of your revenue, even an increase in revenue. However, if you're qualifying under the revenue reduction, basically you're looking at a 20% revenue reduction in any quarter versus the same quarter in 2019. And this is the last part here I want to go over. This is the part that actually really helped those small businesses that started during COVID. They're called recovery startup businesses. These are businesses that started after February 15th of 2020 and have less than $1 million in gross receipts will automatically qualify for Q3 and Q4 of 2021, regardless of anything. You don't have to have reduction. Obviously, they weren't in business in 2019, so they didn't have any reduction in revenue. You don't have to have any sort of government mandate. Those new businesses that had payroll in Q3 and Q4 of 2021 that started after here and meet this test automatically qualify to get their ERTC and get a portion of that payroll reimbursed to them. So how much is it? This is actually one of the better things about 2021 under the ERTC. It was increased from that 50% that we talked about in 2020, 50% of the first $10,000 per employee. Now it's 70% of the first $10,000 paid per employee. So $7,000 is now your maximum eligible ERTC. The bigger part of that is in 2020, that $10,000 didn't reset. It was the entirety of the year. In 2021, it now resets every quarter. So if I had the same example, one employee that I paid $40,000 a year, and I was eligible for every quarter, and there are ways to be eligible for every quarter, then in 2021, I would look at that as $10,000 for the first quarter. Therefore, I'm eligible for a $7,000 ERTC, $10,000 for the second quarter. There's another $7,000 ERTC. Same thing for the third quarter and the fourth quarter. There's $28,000 just for one employee if I paid an employee $40,000 for the year and was eligible for all those periods. So as you can see, 2020, the maximum amount I'm going to get is about $5,000 per employee. In 2021, that's potentially $28,000 per employee. This number gets much bigger if I'm eligible for the periods. And again, every period is different, so we have to look at every period. But that's why a lot of businesses typically end up getting quite a bit more in 2021 than they did in 2020. And in states like Washington and California, those are just great states that really qualify based off of the restrictions that were in place through June of 2021. The maximum credit, and you'll hear this say in different ways. A lot of times, if you're actually looking out there, most businesses say the maximum credit is $26,000 per employee over the time frame, which is somewhat true, somewhat not. It's actually $33,000 because technically, if you were a recovery startup business, you can apply for that fourth quarter of 2021. Unfortunately, only recovery startup businesses, so those that started after February 15th of 2020, those are the only ones that are going to be able to apply for fourth quarter of 2021, which is why most businesses say $26,000 per employee is your maximum amount. No matter what, it's a large amount. If you haven't looked into this, it's something you need to look into. And again, we focus primarily on this. Again, I took my accounting firm and completely revamped it so we can focus just primarily on ERTC filings. But I encourage everyone, and I'll talk about that a little later, talk to your CPA. If you've got a CPA that you trust, a lot of CPAs aren't doing these because you've got to understand the nuances of how to file for the ERTC, but talk to them because I guarantee every CPA knows about it. And if your CPA doesn't know about it, you might want to look into a different CPA. Sorry. Why haven't I heard of this? I get this question all the time. Oh my goodness, you're talking hundreds of thousands of dollars. Why in the world have I not heard about this? One of the big reasons is, as I mentioned earlier, the way that this program came out initially is that it was either the PPP or ERTC. So most businesses went with the PPP. And it wasn't until the Consolidated Appropriations Act in the end of 2020 that changed this and made it so both businesses could get both. At that point in time, this opened the program up to a lot of businesses that were not eligible before. And unfortunately, at that point in time, you're also going into income tax season. And typically, on income tax season, especially during COVID, your income tax preparers were very busy with all of the rest of the income tax implications from what COVID did. And that meant that this kind of fell by the wayside. It's getting more popularity now, but we're getting closer to the end of this program. It starts phasing out here middle of 2023. So a lot of CPAs aren't spending the time to get to know this and taking advantage of it while it's still here. And again, that's kind of why I talk about that. CPAs don't typically handle payroll tax filing. This is filed on the 941X, which is a payroll tax form. Usually they leave that up to your bookkeeper or payroll tax company. And so they assume that they're going to take care of it, and they're going to assume wrong. A lot of business owners, if I can really tell you, advocate for your own business to take advantage of this. Don't wait for your CPA and don't wait for your payroll company to do this. Because bookkeepers, unfortunately, don't handle complicated tax matters. So it falls by the wayside with them, and payroll companies are not tax credit companies. So they might reach out to you and let you know, but you're the biggest advocate for your business. You're the one that's going to help out with trying to push for what this is. So again, I would encourage everyone who isn't sure to reach out, get the information. You can contact us, you can contact your CPA. That's actually the end of my presentation here. So ERTCfiling.com is the company that we have that does this. We are strictly a payroll tax credit filing company that focuses just on ERTCs. We do some other tax credits, but this is the division that posts just ERTC filings. I am definitely not one to discourage somebody from talking with their CPA or trusted tax advisor to get more information about this, but just don't let it go as far as it is. There is a time frame for us to file for this, and it's 3 years from the original date of filing. Again, the original dates for a lot of these were in 2020, so in 2023 is when we are looking at these expiring, and unfortunately, businesses are going to leave money on the table, and that's going to be the thing here. And that's my goal is to try to help as many businesses as possible to try to not leave money under the table. And I think that wraps it up, Bob, as far as the presentation goes.
Thanks, Thomas. That was very informative, and I know we've taken advantage of it. And I know, like I said, a number of other BizX members to the tune of over, I believe, 5 million, and I think you've helped recover I think over $200 million.
Yeah, actually,
businesses so far.
Had a chance to pull that up. Like I said, we work with a number of companies all across the country. We actually have partnerships with other franchise chains and things along that end. Our total amount just exceeds $210 million for what we filed for. My goal for the program was to file for $1 billion in refunds for companies by the time we get said and done. And then for BizX, actually, I pulled that number up and we just exceeded the $10 million mark for BizX clients and what we've managed to get for BizX clients. Wow. $10 million, just exceeded.
So we have a couple of questions here and I'll go from there. And you can raise your hand or I'll read them out. And just a reminder for BizX members, the fee that your company charges, they can pay in BizX. And what is that typical fee? I think it was like $900 a quarter or something like that.
Correct. Yeah. So this is something, again, I'll advise businesses as they go out there and really taking a look at how the process works for preparers and what they want to charge. Be very, very wary. that you're not paying a percentage based off of what you're getting back. That is illegal from a CPA standpoint. They can't do that. So there's a lot of businesses out there that are taking advantage of business owners that are going to get a lot of money, and therefore they're charging you a lot of money, and there's really no reason to pay that. We do charge a fixed fee. We do take BizX to do it, and it is about $900 per quarter. But our total fees, when we look at, and this is, I'm proud of this, so I like to say this from a company standpoint, our total fees are about 2% of what we get back for companies, and that's not what we're charging, but that's something that we have. But we do take BizX, and that's the way that primarily.
That's 100% BizX.
100% BizX.
I know some other companies that paid up to 10% in cash. So any case, so here's some other questions we have, and you can raise your hands, but I'm going to go through. So it says, first question, if you qualify based on things you say, how does your tax accountant need to be in the process?
Yes, that's a good question, because the difference between ERTC and PPP is ERTC is considered taxable. So your income tax accountant does not need to be involved in the filing. That can be done with your 941s and payroll reports, and does not need your income tax accountant involved if they do not want to be. But you're going to get a refund based off of past periods that need to be reported on your income tax, which means there needs to be an amendment to your income tax on the past periods. What you need to do is you need to notify your income tax accountant once you know how much you're going to get back, so that they can go back and report that. And unfortunately, you will have some income tax that you will probably owe based off of reporting that. But I use the example of winning the lotto. If I win the lotto and get $1 million and I have to pay $200,000 in tax on that $1 million, I'm still up $800,000. It's still worthwhile to do that. It's the same thing. If I get you $100,000 and you're going to pay an extra $20,000 in taxes, it's still worth it. You're still up $80,000.
So next question, how is the government auditing this ERTC?
That is a great question. So as of right now, to be honest with you, the government is not auditing the ERTC as much. When they get the forms, they are very, very backlogged on filing these forms. And I will be very honest with people that the two downsides, and we go over this every time we do a filing with clients, is number one, the ERTC is taxable, so you will have to follow up with an amendment on your income tax return. And number two, the time frame the IRS is taking is about 6 to 8 months to process this. So don't be in a hurry. It's not going to come right away. You're going to have to wait for the IRS to process what they're doing. Fortunately, there is no review, as I said before, an approval process. You are trusting who's filing this for you to be competent enough to be able to file it accurately. And your chance of an audit is similar to your chance of an audit for income tax purposes. And you can actually Google that and pull up your chance of audit. It's actually quite sad, the chances of audits for those, but that doesn't mean that you don't want to be careful. Very careful in regards to what wages you're showing, in regards to documenting what income, or excuse me, income numbers that you're using or wage numbers you're using. Because if you are audited, you really want to have that paper trail. And so that's something that we do, is not only do we help kind of go above and beyond in regards to the paperwork that we're filing for the client so they can claim this, but also on that paper trail later on, so that if you're in that very, very rare minority that did end up getting audited, you're going to be able to show them the paperwork that you had, the numbers that you used for the calculations, and how you became eligible for what the ERTC was.
Cool. Next question. I think you answered this.
Real quick, Bob, if I can say something, going back to that, and this is just a bit of speculation on my part, but dealing with this and being, again, one of the leaders in ERTC filings in the nation, the things that I've seen out there are disturbing in regards to businesses that are filing for this with no documentation whatsoever, or just blatantly filing for any periods there are because the IRS isn't approving. It's just the IRS is processing. In my mind, the people that are really going to be in trouble with this in an audit standpoint are those people that don't have any sort of documentation whatsoever. And unfortunately, there are a lot of businesses out there that are getting some bad advice, just being told that they're approved for this and just filing for it without understanding why. So if you want to help yourself in an audit case, understand why, understand the amounts, make sure there's a paper trail. As long as there is, you're going to be fine as far as an audit chance goes. Sorry.
Great. No, thank you. Okay, I think you want to answer this 3 years. It says, when is the last day you can apply for this based on coming to an end? So I heard you say 3 years. Is that correct?
So There's a couple of points though, and I actually like going into this a little more. 3 years from the original due date is the time frame that you have to file for this. So the first original due date was July 31st of 2020. Therefore, the first period will start to phase out July 31st of 2023. However, because it's taking the IRS 6 to 8 months to process these, it's the IRS. Unfortunately, we've all dealt with the IRS. They're not the most intelligent government entity out there. And what concerns me is that someone's going to file this on January 1st, and the IRS is going to get to it on August 1st and respond and say, I'm sorry, it's August 1st. You've already passed the statute of limitations for filing these, and therefore you can't claim this. So we're trying to encourage as many businesses as possible to file it prior to the end of this year to avoid that scenario where they're filing for a period, they submitted it prior to the expiration, but the IRS didn't process it until afterwards. So really try to get this done by the end of the year if you can.
And then the next question, are owner payroll dollars included in this program?
That is one of the more complicated answers to give you. And I can make it simple by, for the most part, saying no. For the most part, no. There are exceptions, and we don't have a lot of time to go into this. If your income tax accountant or if whoever you're paying to do this for you doesn't thoroughly understand what qualifies and what doesn't qualify, what's a majority owner, what's a minority owner, who's related, that's a red flag for you that they don't really know what they're talking about, because this was really one of the hot topics of should we include owners, should we not include owners? And again, it depends on a number of different circumstances that, you know, when somebody calls in, we go over with them. The easy answer I can give for what this is typically no. Just plan on that not being, and if you find you're one of the rare ones that are able to include it, great. There are some exceptions, but it's not very often.
Next question. Do you have to prove the same employee is still working for you, or does it matter if the employee worked before COVID or after COVID?
I'm trying to understand that question. So let me go a couple of ways with this one. Do you have to prove that same employee is still working for you? Yes, there was wording that required that employee to continue to work for you for a certain period of time when you filed for this. Here's the problem, is that the IRS has not come out and said right now, it is June 16th of 2022. I'm looking at a 2020 tax credit. It's June 16th of 2022. Does that employee still have to be working for me on June 16th of 2022? Or is it enough that they work for me through 2020, maybe into some of 2021, so that when I'm filing the tax credit for 2020, I can qualify? And the simplest explanation I can give you is we've taken the stance that if they worked for you through the period that you're filing for, then that employee is eligible. They don't still have to be working for you today, but they do need to be working for you through the period that you're filing for.
That you're filing for, yeah.
Correct, yeah. And then does it matter if the employee worked before COVID or after COVID? It does not. If it was a new employee that you hired during whatever period you're filing for, they're eligible as long as they work for you through the end of that period that you're filing for.
Here's another question. How about an LLC S Corp that was established in 2021, had no transactions or revenue or actually hired anyone, but it's just owner on the records? Does it qualify for anything? When it was, I guess, sounds like an entity was created, but there was no payroll.
Sure, and that's exactly the point that I was going to point out. If there was no payroll beyond the owner's payroll, and again, as we said earlier, owner's payroll typically is not eligible. Typically, it sounded like in that case they wouldn't be eligible. But the secondary part that probably makes them ineligible is they have to be in operations.
Yes.
In the period to qualify. So if they had no revenue, they had no expenses, it was only the entity that was around that was maybe paying owner's payroll, they still wouldn't qualify because there was no operations actually around in that sense.
Okay. I'm waiting for other questions, but while we're waiting, I just want to say the process. So I can speak from our perspective, and also I would say at least a dozen members and friends that I've referred over. And from a process perspective, what we've done is either sent them to the website or they've called a 1-800 number. They answer a few questions, go through, I think, a 15-minute process, and then they know whether they qualify or not. there's other information they need, and then they're off to the races. Is that the easiest process that we
Yeah.
like everybody to file, Tom?
That is the reason why we've grown as much as we have, is because our process is fairly simple. It's usually somebody calls in and goes over initial free consult just to review the business and tell us more about the business itself. And usually we can figure out if they're qualified or not from a 15-minute phone conversation.
Yep.
They get the list of documents that they need to send to us, and they sign up for a 90-minute appointment with us to go over with the tax filer. And as long as they've gotten all those documents to us prior to that 90-minute appointment, at the end of that appointment, they've got everything they need. We actually have everything prepared. And for BizX customers, we build them on BizX. If they're paying for it, then we release all the documents. We send it to you right then. Your only responsibility beyond getting documents to us is to sign the 941X and to mail it to the IRS. That's all you have to do on your end.
It's pretty straight. You've got a great process. We should put someone in the chat, maybe the website and the 800 number. And then while we're waiting, one more question from Beth Vossimer. Does it matter if you changed your filing status with the IRS from a sole proprietor to an S corp?
That does help. So if I'm going to assume maybe during COVID you changed from a sole proprietor to an S corp, that helps because S corps are required to pay owners wages. So if you are one of the few that qualify, those will qualify. But again, in that case, I question: did you have employees? Because really, it's those employees that are going to qualify. Yep. So whether you were sole prop with employees, whether you were an S corp with employees, it's that payroll itself that's going to qualify in that time frame.
And then the other question is, do S corps qualify in 2021? Sounds like that's a yes.
That's a yes, as long as they had employees, correct.
Okay, and Beth had 40.
And that they're eligible for the periods of their.
Beth has close to 45 employees. So Beth,
good.
I think, is getting a big check.
Yep.
Hopefully. You need to call. And the phone number, it's ertcfiling.com, phone number 888-678-4269. And it's in the chat, and it's been all over the BizX website, the BizX members group. By the way, while we're here, I'm going to throw out a plug for our BizX members group. So Boris, maybe you want to put a link to that into the chat as well. That's been a great that's been a great way that our members are being able to share information. I think you sent to hosts and panelists, so you want to share that with everyone for us. But yes, while we're waiting for more questions, what is there a cool story around? And we've got, I guess, another 10 or 15 minutes. But Tom, is there a cool ERTC or a surprising story that you want to share? That's like, wow, like.
I mean, honestly, in regards to what I enjoy doing, and my passion's always been to help small business owners. This is like a dream come true to have an opportunity like this, to jump on what we did to create the system that makes it as easy as it is. Yeah. I think it's a lot of fun. We're doing dozens of filings a day. It's a lot of fun to hear back from the filers in regards to the stories of the businesses they help. Personally, one of the fun ones, Anytime Fitness, we have a partnership with them across the country. There was a lady out of Ellensburg who, a great story of really only having about 5 employees, but she made it through COVID because she had this huge $200,000 saved up. And she was planning on buying another gym. She was planning on expanding and going to somewhere to expand her operation, and COVID killed everything that she had. She stayed in business because she had the money, but it took away all the money that we had. And it was the neatest thing. By the time we got done with this, we found out that we were able to get her back all of that money that she had spent, almost $200,000. Actually, I think it was closer to about $150,000, like within $15 or something like that of everything. I mean, she broke down to tears on the phone. And when you get to make that much of a difference, accountants don't get an opportunity to really make a lot of difference on a very emotional, impactful level. But in this case, we are. And we're hearing those stories every day of businesses that made it through COVID and paid their employees and stuck through it and made sacrifices. But
Guys, You guys are
helped out.
superheroes. Here's another question, and I'm going to try to, well, I think I know the answer, but I'll let you answer it. It's pretty straightforward. Is a business
Oh, I think I lost you, David. I don't know if that was my connection or yours.
Yeah.
Could you ask that again?
It was, is a business still eligible if it received 2 PPP loans?
Yes, great question, and again, one that there's a lot of misinformation out there where people think that they've got 2 PPP loans and are not eligible. 90+% of our clients that filed got 2 PPP loans. So there's a lot of eligible period. That's one of the tax strategies that you can look at when you're filing ERTC is how to apply wages to PPP as compared to how to apply it to ERTC. We take a very aggressive stance on that and looking at excess wages over the $10,000 mark, taking a look at ineligible wages, taking a look at the medical to make sure that that's included. If you're a restaurant and you tax tips, we can throw tips in there to take a look at that. There are lots of tax strategies that you can use to maximize these. And if you've got 2 PPP, that by no means is going to disqualify you from taking this because PPP typically was meant to cover 2.5 months of payroll, whereas we're talking about a good 15-month if you're going through the middle of June or 21-month period if you're going through the end of 2021 of payroll that could be eligible for this.
Right. Well, good. We see any other questions? It's pretty straightforward. I think we've got one of the foremost experts on this in Thomas. And but if there's no other questions, we'll wait a couple seconds and we'll wrap things up a little ahead of schedule. Here's something, and I don't know if we can do a poll. Who's the one doing? I know there's a way to do a poll, so I don't know if any of the people running the Zoom, but I'll just throw it out there while we're all here. Any feedback? What are our members' businesses feeling? Interest rates are up. It's a different market out there. Are you feeling something different? Are you preparing for something different? I'd love to kind of, while we're together here, get people's thoughts. Do you anybody want to chime in with any thoughts around that? Beth, are you seeing any people change up a little bit? Mark, Peter, I'm just throwing out some names. Feel free to chime in. Says preparing for more businesses need marketing.
I would say, Bob, that I have had more people reach out in the last 30 days in need of marketing support.
Okay.
And to go back to promoting their business where they either didn't have the funds before or they now realize that the magical chain that they have been living on for the business during the COVID that is now going to start dripping off. So it's not as much the wild, wild west. I think we might be getting back to starting realizing that business has to come back to a level of normalcy.
So when you say marketing, they're seeing they're going to need to spend some money to be able to attract business versus sitting back and it just coming in.
Exactly.
Okay. Well, and that's good. And BizX, for those of you who need marketing services, be it digital, be it, ad specialties, be it, even if you wanted, billboard advertising, media and marketing, BizX is a great way to do that and save cash. Any other feedback from the members out there on kind of what they're seeing or hearing with the interest rate shift and the market current market conditions? Thomas, are you seeing anything different from an accounting perspective, or are you so focused on the ERTC world?
Oh, I'm pretty focused on the ERTC world right now. Like I mentioned before, I have 5 businesses, but I think I've been lucky enough to invest in areas that haven't really seen a downturn per se, and what's going on based off of interest rates or based off of markets or things like that. I worry a little bit about inflation, what inflation's going to do as we go along.
Mark Pearl from San Francisco said, we're in San Francisco, return to office is only at 16%. We're suffering because workers are still at home offices. Mark, what kind of business are you in?
I have a doggy daycare boarding facility and retail store for pet supplies.
Okay. And you're right in downtown San Francisco?
Yeah, south of Market, in the technology area, south of Market, Soma, South Beach.
Got it. Yeah. So all the tech workers with their dogs are at home right now.
And yeah, exactly.
Okay. Interesting. Yeah. So you definitely were impacted by this, and hopefully can take advantage of some of the ERTC dollars.
It's going to be very helpful if that's the case. Yeah, that'd be great. This is very helpful. Thank you, everybody. We're definitely going to hire you folks.
Great. Okay. Any other closing thoughts before we roll up? And I think we'll be doing, we've kind of put this together very quickly. Thanks to the team at Fury, David and Kyle, David Jackson, Kyle Wall, Aaron Blank and his team for pulling this together. And thanks to the team at BizX. And thank you, Tom, and your team for what you do. And, $10 million and counting. Keep us posted on those numbers. We'll share those. I would ask you to continue to participate in the BizX community, through our Facebook members group. And we'll look at potentially bringing some other experts within the community. If you know of any experts you'd be interested, please reach out to us in speaking, and we'll see if we can put more of these events on.
Thank you.
Thanks, Bob. Thanks for having me here.
Well, thank you. And thank you for everybody attending. Have a great rest of the day.
You too. Thank you.
Okay. Bye-bye.